Learn how to master the art of trading today. With dedication and the right mindset, you can navigate the market's complexities and seize opportunities. Embrace continuous learning and adapt your strategies as needed, ensuring success in your trading endeavors. Trade like a pro and watch your investments flourish. With these simple high-frequency trading strategies made easy. In this video, we'll break down the complex world of high-frequency trading into easy-to-understand concepts, perfect for beginners and experienced traders alike. From identifying profitable trades to minimizing risk, we'll cover it all. Whether you're looking to supplement your income or become a full-time trader, this video is for you. So, what are you waiting for? Start trading like a pro today. Start by market making involves strategically placing buy and sell orders that surround the current market price. By capitalizing on the bid-ask spread, traders can realize small yet consistent profits. This approach requires quick decision making. Market making is a dynamic trading strategy that allows traders to benefit from market fluctuations. By earning profits from the bid-ask spread, ultimately creating a vital role in enhancing market liquidity. Another approach is statistical arbitrage can be an alluring strategy for traders. Leveraging advanced formulas to exploit fleeting gaps in asset pricing effectively. By utilizing statistical methods, traders can identify and act on these disparities swiftly. Statistical arbitrage not only requires a deep understanding of mathematical modeling but also an ability to act quickly in volatile markets, ultimately providing traders with the opportunity to generate consistent profits through informed decision-making. You can also explore momentum trading as a dynamic strategy centered on identifying assets that are moving rapidly in a specific direction. Traders enter positions anticipating that these trends will maintain their trajectory for brief periods, yielding quick returns. Momentum trading allows participants to capitalize on fleeting opportunities in the financial markets, fostering a thrilling environment where swift decision-making can lead to significant gains or losses within moments. Effective execution can transform a simple trade into a profitable venture. A different method is latency arbitrage allows traders to harness advanced technology, enabling them to react swiftly to market fluctuations and capitalize on fleeting price discrepancies before competitors do. Ultimately, this strategy exemplifies how innovation can disrupt traditional trading practices, creating opportunities for those quick enough to leverage these advantages in a competitive financial landscape. Understanding liquidity detection is crucial for traders, as it allows them to anticipate price movements driven by significant market participants. Big players can influence market dynamics. By mastering liquidity detection, traders can position themselves strategically, maximizing their potential gains while minimizing risk in a volatile market environment. This knowledge becomes their edge, empowering them to navigate the complexities of trading with confidence and precision. Pair trading is a strategy that exploits these divergences, aiming to capitalize on the eventual return to the historical norm. This strategy seeks to minimize risk while maximizing profit. Pair trading allows investors to navigate market fluctuations smartly, leveraging historical correlations to achieve financial goals. By understanding this strategy, traders can enhance their portfolio's performance and reduce exposure to unpredicted market movements. VWAP, or volume-weighted average price, serves as an essential tool for traders, helping them navigate market fluctuations while achieving efficient order execution. VWAP trading helps traders minimize their market impact. By adhering to VWAP trading principles, traders can make informed decisions, strategically positioning their trades to maximize potential gains while reducing unnecessary exposure to volatility. Ultimately, this approach allows for greater efficiency and effectiveness in trading practices. Iceberg order strategy acts as a shield for traders, allowing them to execute large transactions without triggering significant market reactions, preserving their positions and reducing potential slippage during trades. By fracturing orders, traders can strategically manage their visibility while minimizing impact. Through this approach, traders maintain a competitive edge and enhance their chances of securing favorable prices, ultimately mastering the complexities of the market with greater precision and confidence. The icebergs of trading remain unseen beneath the surface, steering the course of commerce silently. Mean reversion trading is a strategy that capitalizes on short-term price fluctuations, predicting that these prices will eventually revert to their historical averages. By leveraging this principle, traders can identify optimal entry and exit points, maximizing potential profits while mitigating risks associated with unexpected market shifts. Consequently, mean reversion trading can become a powerful tool in the arsenal of savvy investors navigating the complexities of financial markets. Event-driven trading strategies are crucial as they allow traders to capitalize on the volatility that follows significant market events, enhancing their potential for profit. By leveraging event-driven trading, investors can navigate the financial markets with agility, positioning themselves to benefit from the swift fluctuations triggered by pivotal news and economic indicators. This method not only amplifies returns but also sharpens market responsiveness. Quote stuffing is a deceptive trading tactic that seeks to overwhelm the market with a flood of orders, making it challenging for rivals to respond effectively. Ultimately, this practice distorts market dynamics and undermines fair competition, making it crucial for regulators to address. Mitigate the impact of quote stuffing on trading integrity and transparency. In essence, traders utilize order book imbalance trading to gauge market sentiment, adjust their strategies effectively, thus navigating the complexities of financial markets more adeptly. By analyzing order flow, traders can identify price trends. Mastering order book imbalance trading not only enhances a trader's ability to respond to market movements, fosters a deeper comprehension of the broader financial landscape, ultimately leading to better trading outcomes and more strategic decision-making. By mastering order book imbalance trading, traders can gain a competitive edge, leveraging the insights garnered from order flow analysis to navigate short-term price movements effectively. Tick trading requires traders to be highly attentive and reactive, often utilizing sophisticated algorithms to execute trades at lightning speed. Each tick can present an opportunity. Mastering tick trading demands not only technical skills, discipline to manage risks effectively, ensuring that even in fast-paced environments, traders can capitalize on those fleeting moments of opportunity. Market microstructure trading delves deep into the intricacies of how trades and orders interact within financial markets, seeking to uncover profitable strategies. Ultimately, by understanding the underlying mechanics of market behavior, traders can craft innovative techniques, not only capitalize on inefficiencies but also adapt to the ever-evolving landscape of financial markets. Cross-exchange arbitrage exploits these price discrepancies, enabling traders to buy low on one exchange and sell high on another. This strategy is critical. By leveraging market inefficiencies, cross-exchange arbitrage allows traders to capitalize on fleeting opportunities, reinforcing the importance of remaining vigilant in the dynamic world of financial markets. This strategy not only seeks profit but also contributes to market efficiency. Thanks for tuning in today. If you found these high-frequency trading strategies helpful, make sure to hit that like button and subscribe for more easy-to-follow trading tips. Stay curious, stay sharp, and keep building your edge in the market. See you in the next video.